Hello everyone, it is the Canadian Futures Trader here. Welcome to the channel and welcome to the video. Today's video, I wanted to go over the new change in the rule to the trailing drawdown, which is now referred to as the end of day drawdown. I want to explain what it is, how it benefits you. I have a few examples and I'm also going to demonstrate it in my own account. So lots to go through. There are timestamps down below if you want to skip to something specific, but let's go ahead and get started. I'm excited about this rule change. So let's just go over what it is first of all. So the trailing drawdown rule change, effective July 2021. So if you're watching this video, this rule change is already in effect. So at the beginning of July 2021, Earn2Trade changed how their trailing drawdown works. Now, I might still refer to it as a trailing drawdown throughout the video sometimes. They are kind of referring to it as the end of day drawdown, which makes sense because that is effectively what it is. It is now updated at the end of the day instead of during the day. So there are benefits to the trader, and I'm going to go over those in the next few slides. I'm going to go through how it works. So I'm going to go through an example that Earn2Trade actually has on their own website, which is fairly straightforward and simplistic. If anything, it's probably the easiest to understand. So we'll go through that. And then I'm going to show you a demonstration through my own account. So I've been trading a 150K account now for several days. I took screenshots along the way just to show it in action and kind of show when the drawdown updates. And then also I wrote out a second example just to show kind of more of an extreme example, you know, with big swings and how that would impact your balance. So first things first, this is from the Earn2Trade website. This is what you would see if you go to sign up for the Gauntlet minis. I put this on here for a few reasons. One, if you're watching this video in July 2021, they're currently running a 40% off sale, any of the Gauntlet minis. The prices you see here on the screen already reflect the 40% off. So they're running a terrific deal. There's a link down below. If you click it, there's no promo code needed. You automatically get these prices loaded up. The second reason I have this up is, and I'll zoom in here, is you see now end of day drawdown. So for each account size, they detail out what that number is going to be. So I'm personally doing the 150K account, so my examples kind of revolve around the 150K account. So keep this number in mind. 4,500 is the end of day drawdown. I do make reference in some of the examples to the daily loss limit, so just keep that in mind. That's 3,300. So first things first, what is an end of day drawdown? So it is an amount that will trail your profits, and as you close out net profitable days, the balance which you cannot fall below will increase also. So this number is updated at the end of day, hence the name end of day drawdown. Your ending balance is all that matters now. So keep in mind as well, if you have a losing day, this number doesn't get reduced. So the drawdown never gets smaller, it only gets pulled up, if you will, as you are profitable. And again, I have a few examples that'll probably make it a bit clearer if you are not 100% sure on how drawdowns work. So we'll get to those, don't worry. So I also want to mention, once your end of day drawdown reaches your initial balance, it doesn't trail any longer. It's fixed at the starting amount. Again, I'm going to show you this a little bit later, so just wanted to point it out. If you're unclear what that means, we'll get to it. So let's take a look, first things first, at the Earn2Trade website and the example that they give. So looking at the Earn2Trade website, how does the drawdown work on the Gauntlet Mini? This is updated for the new rule change. Now, I'm not going to read you every single bit up here. Basically, any accounts that start after July 1st, the new way the drawdown is calculated is in effect. So I mainly want to look at the example they provide. So account size is 100,000 in their example. Your drawdown is 3,500. So when you start your account, day one, you haven't even done a trade, the most you could lose is 3,500 or just below that and not break a rule. So day number one, after the trading day is done, your balance fluctuates during the day, but your ending balance is at 102,000. So you made $2,000 net. Day closes out, Earn2Trade's going to adjust your minimum balance now to 98,500. So 2,000 above here. Makes sense. You made 2,000. Your trailing drawdown has been pulled up, and now your minimum balance is here. You still have a $3,500 buffer, right? From 102 to 98,500. Day number 2, your second day, your account balance at the end of the day is 101,000. You lost $1,000. Your minimum account balance does not change. Remember, trailing drawdowns, regardless of whether they're calculated intraday or at the end of the day, they never go down. They only get pulled up as you make profits up and above, and you kind of reach new highs. Think of it that way. So day number 3, your third trading day, your account balance at the end of the day is 103. So you get yourself from 101 up to 103. It's your new high. Your trailing drawdown is pulled up again and is now 99,500. Again, it's trailing by 3,500. You've kind of made up that slack, if you will. You reached a new high, and now you've created a new $3,500 buffer for yourself going into day number 4. So I mentioned as well, this stops when the account reaches your initial balance. So it says right here, this continues until your minimum drawdown reaches the starting balance. In this case, it's 100,000, at which point it will no longer rise. So when you get to, let's say, $106,000, well, at that point, your trailing drawdown is just going to be stuck at the $100,000 level, and now you have a $6,000 buffer, if you will. So they have some additional notes. The minimum balance is only adjusted at the end of the day. That is the primary point of the rule change. It's now adjusted at the end of the day. It's not done after each individual trade. And one thing you do have to keep in mind is it is based on your open trades. So, let's say, unfortunately, on one of these days, let's say this one, you're 99,500. On the next day, day number 4, you go down, you're in an open trade, your balance dips down to 99,400, but then it quickly turns around because you didn't close out the trade and it gets back up to, let's say, 100,000. You did still break a rule. You can't go below this number even in an open trade, so keep that in mind. Okay, so with that example under our belts, let's talk about some of the benefits of this change to the traders. Any ups and downs during the trade day don't impact your drawdown anymore. So let's use a very extreme example here. Trade number 1, first day, first trade, you make $3,000. Second trade, you lose $3,000. So under the new rules, it has a 0 impact on your end of day drawdown, right? Let's say, using their number, you start with 100,000. Your first trade, you get yourself up to 103. Next trade, you lose 3,000. You're right back to 100,000, and you just say, I'm going to stop for the day. Well, you're still at 100,000, so your end of day drawdown is not going to change. Now, under the old rules, your drawdown would have changed because under typical drawdown situations, it trails based on every single trade. So when you made that first win of 3,000, your drawdown would have been pulled up 3,000. So then when you lost 3,000 on your second trade, well, you didn't break a rule per se. I think the drawdown was 3,500, but now you're dangerously close to that number. So it's a very drastic difference when you think about it. It's the same punchline in terms of your balance. You have $100,000 to start, you have $100,000 to end the day. But with the new rule, you still have a 3,500 buffer. Under the old rules, you don't. You only have about a $500 buffer left. So another benefit to the trader is it's one less thing to worry about. We have enough to think about during the day. Trying to monitor what your minimum balance has to be. Let's say you're in that situation where you have a big winner. Now you need to start calculating. You need to think, or you need to at least go look at Rithmic and see, okay, what is the minimum that I can have? And I can say from experience, I've broken trailing drawdown rules purely out of just being caught up in the moment, trading away. You have a big winner, you take a big loser, you're not really thinking about it, but guess what? You violated a trailing drawdown rule. Well, now that wouldn't be so much a concern. You have a fixed number, you know what that number is for the day. So a very easy process to use would be start the day just knowing what that trailing drawdown number is, what the minimum balance you can have is, also what your daily loss limit is. Whichever number is smaller, that's the most you could lose. If you lose more than that number, you will break a rule. So I said early on when we looked at that first screen with the Gauntlet minis listed out, be aware of both your daily loss limit and your trailing drawdown. Now we're mainly focused on the trailing drawdown here, but I just wanted to throw in the daily loss limit because it's important too. I don't want people to lose sight of the fact that you have this other number you need to monitor as well. So let me show you my own personal account. Let's dig in and see this in action. I'm going to try to go through these fairly fast just because I have a feeling most of you probably get this by now, but I wanted to demonstrate it actually in action. So this is my Earn2Trade dashboard, 150K Gauntlet Mini. Day one before I did any trades. So you can see my balance is 150,000. My minimum balance is 145,500. I have a 4,500 drawdown available to me. You also see that here, right here, end of day drawdown. And then that daily loss limit I talked about is 3,300. So I threw in the second screenshot. This is from Rithmic. I just want to show how it looks in here. Here you have your account balance. So account balance is your current balance. Cash on hand is always your previous day's ending balance. So since this is day one, it's the same. Now, auto liquidate threshold in the past would have shown what your trailing drawdown is. But now, since it's updated at the end of the day and it's handled a little bit differently, there's a different place to see that, and I'm going to show you that. Basically, if you right-click, if you're in your trader dashboard and you right-click on this, you'll go to something called risk parameters. This is what the risk parameters screen looks like. It just pops up in Rithmic as well. You'll see 3 tabs across the top here. The default one is risk parameters set by the FCM administrator. FCM stands for Futures Commissions Merchant. That would be Earn2Trade in this case. So you will see here, auto liquidate criteria, minimum account balance, 145,500. So this is all before I've done any trade. I'm just kind of showing you the baseline. Here's where we're started. Now let's do some trades and get interesting and see where this goes. So this is probably the most important screen in this entire presentation. It at least demonstrates the rule change in action. So let me walk you through what is on the screen. So this is after doing some trades, but before the market closed. So on the right-hand side here, this is kind of a section from a chart within Rithmic. I like this. It's a nice, easy way to see your balance. So my total P&L trading this product was $130. I think it was YM. My account balance is only up $65.36. Reason being is commissions. I actually did several trades, some winners, some losers. Net effect, we did end up with $130, but back off the commissions from all those trades, and we are at $65 net profit. Now, this top part over here from Rithmic as well reflects the exact same information. My account balance is now $150 and $65.36. Cash on hand, I mentioned, is my previous day's starting balance, which is 150K. Total closed P&L was 130, but net P&L 65.36. Those numbers the same as off to the right. Here is the risk parameter screen. Again, I just kind of have a screenshot of part of this. So remember, this is day one after I've done some trading, but before the end of the day. You see auto liquidate threshold, exact same number, has not changed. So the point of this being, see it in action. Your trailing drawdown does not change throughout the day. It doesn't matter that I had some winners, I had some losers, I had $65 in the end. None of this matters. This will matter once the day actually closes. So let's get to that. I didn't do any more trades after this. So day number 2 before trading, the end of day is now updated. So again, we have our favorite Rithmic here. Let's take a look. So cash on hand, I said, is always the previous day's balance. So we ended day 1 at $65.36 in profit. You see that here. My current account balance is the exact same thing. Like I said, I haven't done any trades at this point. And if we look at our risk parameters here, you see now our auto liquidate threshold, which is essentially your trailing drawdown balance, is updated to be $145,500 and $65.36. So it went up $65.36. So it didn't matter that I had several winners and several losers previous days. What mattered was the ending balance. I made $65. My trailing drawdown got pulled up $65. So day number 2 was another winning day. Not big winning days, but hey, we did better than day number 1. You see right here, I closed out profit and loss of $250. I can tell you exactly what this is. This is 4 lots of the Ultra Bond, and this is 2 tick winner. So my net P&L is $233.84. It's a lot closer this time because this was just one trade. So this is essentially, the difference is just the commissions on those contracts. So my cash on hand, again, that was the ending balance of day number 1. Account balance now after this P&L is we're just shy of 300. Let's just call it 300 for ease. You notice here, again, this is day number 2, but it's midday. Day hasn't ended. my auto liquidate threshold still has not changed. So even though I've done a trade here, I've made some profit, auto liquidate threshold, aka drawdown, has not changed. Once again, just trying to highlight the point that it does not change intraday anymore. It will only be updated at the end of the day. So not trying to go overboard with the examples, but I want to give an extreme example and with kind of some more losers built into there. So bear with me. Day number 1, 150k balance, 3,300 daily loss limit, 4,500 end of day drawdown. So, like I said, my methodology would be say, okay, which of these two numbers is smaller? 3,300. That's the most I can lose today. End of story. If I lose more than that, I'm going to violate a rule. It doesn't matter what my end of day drawdown is because my daily loss limit is a more limiting number for the situation that I'm in right now. So luckily though, in fictional land, trade number 1, I'm profitable $3,000. Trade number 2, I lose $1,000. I net $2,000 profit for the day, or I would be at 152k balance. So 3,300 is my daily loss limit. That number never changes. It will always be 3,300. Well, what's my end of day drawdown at? Well, the answer is still 4,500 or 147,500 balance. So 3,300 is still the smaller number, and that's the number I have to worry about on day number 2. So this makes sense, right? I netted 2,000 profit on day number 1. My trailing drawdown got pulled up $2,000, and we still have a $4,500 buffer, if you will, between what my balance is right now and what my max drawdown is. Okay guys, so continuing on with the example, don't worry, this is the last screen of examples. Just want to make sure it is crystal clear how it works in both the winning and the losing situation. So day number 2 turns out isn't so great. I end up losing $3,000, but I don't break any rules, right? My trailing drawdown, I still had 4,500. My daily max loss was 3,300. Haven't broke a rule. My balance is now 149,000. So day number 3, we get up. Our balance is 149,000. Daily loss limit 3,300. Like I said, that number is going to be the same every single day. Our end of day drawdown is 147,500, which is the same as the previous day. It did not move. It makes sense, right? I started the day with a 4,500 drawdown. I lost 3,000 on day number 2. I only have $1,500 of buffer remaining on my drawdown. So guess what? Going back to my rule, I look at my daily max loss and I look at my drawdown number. Whichever is smaller is the number I need to be worried about for that day. Well, I put myself in a situation now where my drawdown is the number I'm concerned about. I only have $1,500 of buffer essentially left before I violate a rule. All right, guys, thanks for hanging in there. I know that was like a lot of examples. Hopefully it makes sense. Let's go over a little summary of this now. So this rule change is nothing but a benefit for the traders. There's no downside to this change in how the drawdown is calculated. It gives you more leeway during the day to trade how you want. It's just going to matter where you end up. So it takes out having to think about your trailing drawdown during the day. Like, you know, you do the little exercise at the start of the day. What's the most I could lose? Boom, you're done. You know what you're working with. So you're no longer getting penalized for having winners followed by losers within the same day. You know, I gave that example. You make $3,000, then your very next trade you turn around and you lose $3,000. We don't get penalized for that at all. Whereas in the past, you would have pulled up your trailing drawdown by $3,000 if it was intraday. Want people to remember it stops at the initial balance, so 150k account. Once I get over, or you get over 154,500, the end of day drawdown will be locked at 150k. It's never going to go higher. And another thing is the same rules apply on the funded side as well. So while I'm mainly talking about the end of day drawdown, I was kind of thinking about this, and I'm actually thinking about putting together a separate kind of presentation or video, if you will, about funded accounts and comparing them and how to think about them. But while we're here and while we're talking about Earn2Trade, I just kind of wanted to highlight Earn2Trade really has the most straightforward funded rules. The trading rules on the funded side mirror the evaluation. So there's a scaling plan during the evaluation. There's a scaling plan during the funded side. The drawdowns work the same, etc. It's also it's the most straightforward, easy to understand funding plan when it comes to how the money is split and what you're able to do in terms of withdrawals. So it's an 80-20 split from day one. Withdrawals are processed weekly. There's $100 minimum withdrawal. End of story, I think. It's that straightforward. And now, just to give a few examples, I'm not going to name names, but I think a lot of you can figure out where some of these come from. So with some of the other companies, you have to build up a buffer before you're able to do any type of withdrawal, and you have to maintain that buffer. Other companies, there's a minimum number of days you have to trade before you are allowed to withdraw. Others, there's a change in the split depending on when you withdraw. And then one company has a $1,000 minimum withdrawal. So again, I'm not going to name names. I'm not necessarily saying that makes other choices bad choices, but I am saying that it's fairly straightforward. And I honestly feel like Earn2Trade does have the best funded program out there. It's why I spend a lot of my time on Earn2Trade. It's why I am dedicated to passing this 150K. I really want to work with Earn2Trade as a funded trader. So I just wanted to point that out. Okay, guys, that is basically it. I do have one other thing I want to talk about really quick. But if you want to get a hold of me, my website, CanadianFuturesTrader.ca, there's links down below. Probably the best way. You can also email me, or there's a form on my website. It's CanadianFuturesTrader@gmail.com. I have social media. I've got Twitter. I've got LinkedIn, etc. It's all on my website. I don't want to list it out here. You can find it all under the contact page. Is probably just the easiest way to get to all that. So the additional thing I did want to talk about is Discord. So Earn2Trade just a few days ago, I'm recording this early in July 2021. Starting out in July, they also launched a Discord. I had been thinking about starting my own Discord server for a while, but I don't have the time. I don't want the obligation of managing it. I don't want to moderate it, all those things. So when Earn2Trade started theirs, I was pretty psyched. It's going great. So here is just a screenshot of the Discord. It doesn't really matter. I'll put the link down below. If you're not familiar with Discord, it's basically just a way for people or companies, in this case Earn2Trade, to create a community, a chat community, break it up based on sub-discussions. There's trader chat, there's off-topic, there's market talk, trading charts, etc. You can go into all these channels. I'm on there. Again, this is fairly new, so it's growing, but so far it's going really well. I really enjoy being on there. People are having great discussions, and it's open to everyone. It's not just for Earn2Trade people in the Gauntlet minis or funded traders. It's open to everybody. Like I said, I was really excited about this just because it's everything I wanted to do with Discord, but Earn2Trade has already done it. So I can just kind of jump in there and interact on there. I know several of you have already joined it. I hope you're having a good time. And I encourage anyone else who was thinking about it, just pop in, say hi, check it out. That is it, guys. So feel free to email me with any questions. I'm happy to try to explain it to you. If you have like a specific example for maybe your account size, or you're trying to wrap your head around like what happens if I, make this and lose this and then I make this, where would I be at? I'm happy to try to walk you through those examples. It can be a bit of a hurdle at first understanding drawdowns, especially if you are on the newer side to these evaluation programs. But it's one of those things that once you kind of clicks, you'll have no problem with it going forward. Thank you everybody for watching. Be sure to check out my website, check out Earn2Trade, the link's down below as well. They only continue to get better and better, and I will see you in the next video.